On this episode of Notorious POD, I speak with two heavyweight industry leaders, Mike Golden and Thad Wong from At Properties. We talk brokerage, we talk industry, we talk technology, we talk macroeconomics. Don't want to miss it.
This is Notorious POD, the podcast for the best informed people in the real estate industry. Rob Hahn is your host, and Notorious is where the real estate industry comes for real talk with no bullshit.
Hello, everyone, and welcome to an episode of the Notorious POD. This is going to be an eventful week, and I think I actually have the perfect guest for having a wide open conversation about what's going on, in the industry. So this is sort of stemming from my conversation with Steve Murray of Real Trends, and Steve and I have been talking about the industry and brokerage models for years and years, and he pointed out that there is a couple of brokers that he knows who he really thinks understands how the industry works, how the business is supposed to work, and have really done a great job. And I'm very fortunate to have them on with me. Let's welcome them on. It's Mike Golden and Thad Wong of At Properties, Christie's International Real Estate. They are the co-founders and co-CEO. Mike, Thad, great to see you. How are you guys?
Good to see you. Awesome, Rob. Thanks for having us.
Oh, thanks for taking the time to join me. And like I said, I know your people are like, what are the list of questions? I'm like, I don't actually have any questions because we're just gonna hopefully have a wide-ranging, open conversation and just kind of see where it goes. But I think most people who are listening, watching, probably know who you guys are. I mean, you guys are one of the top independent. Well, I guess you're no longer independent because you're part of Christie's, or I don't even know how to think about that.
We're still independent because we own Christie's.
There you go. Okay.
So and also I would argue that a lot of times people look at independent brokerages. I would argue that the franchisees are independent because they are not corporately owned. Right. So I've always thought of that as being kind of like a misconception because a lot of franchisees are individual operators.
There's a weird nomenclature we have in the industry, like independent versus, franchise. But you guys are, At Properties is one of the most successful brokerages, I think, in the last 10 years. So just in case most people don't know, just tell us a little bit about At Properties, how you guys are founded and the growth you've had and some of the recent moves you guys have made. Let's start there.
I'll start it off. So Thad and I started the company about 22 years ago. We were a Chicago City broker at the time, and we've sort of expanded the company incrementally over the years. We started out doing more development services type work. So we were hired by developers to sell high rises, loft buildings in Chicago. We morphed ourselves into a full service brokerage company back in the early to mid 2000s, and then when the downturn hit in 08 and 09, we saw it as an incredible opportunity to expand our company. So we moved out into the suburban markets and became more of a regional brand as we were licensed and had offices in Illinois primarily, but also Indiana, Wisconsin, and Michigan. And then over the last 4 years, we've been really pushing hard to get more of a national presence. We have investments in companies in Georgia, in Virginia, in California now, and then our most recent acquisition and investment was in the Christie's International Real Estate Network. So we are, we're a very expansion-minded company. We are an independent broker, and we view the Christie's International Real Estate Network as an opportunity to service independent brokers, and that's really our primary focus. And Thad can jump in and talk a little bit more, but we've expanded from just the two of us in a room together to I think we've got over 4,000 brokers now our kind of company owned, and then add Christie's in there, and it's a lot more.
Yeah, I would say there's maybe two big differences between us and the other companies that are out there. Number one, we're still operating a brokerage, so everything that we're doing is servicing, At Properties, and now At Properties, Christie's International Real Estate. Locally, Chicagoland, $17.5 billion, and when you add the companies that we also own, we're at just under 30 billion. So the cool part is that our brains are continuously focused on owning and operating a brokerage, which aligns us perfectly with independent operators around the country. The second piece, which is really different, is that we're the only brokerage that's scaling through technology, meaning that prior to the acquisition of Christie's, when we were growing the At Properties brand, the value proposition was really the technology, the A to Z. We call it platform. It's a deal management system, consumer facing, CRM integrated, and it's all fully integrated that we built from scratch in our own code. So we have this piece here, and we also have a very deep mid-level marketing company. We have 50 salaried employees that are operating our marketing. Those two things are very scalable, technology and marketing. So the reason we acquired the Christie's International is that we really had what we felt was the best engine in all of brokerage, the best technology and marketing engine that can be combined with an independent operator that brought culture to the table. So if we could wrap that with the Christie's International real estate brand, we felt like we would have the greatest ability to bring the most value to independent operators that have relationships and business prowess in their communities to help them grow. So now that's what we're doing. We're taking it for our new affiliates. We're bringing them Christie's International Real Estate, a great brand to add to their independent brand to help them trickle down from the luxury down. And then we're giving them a plug-and-play technology solution that's fully integrated, that is growing with the test of time, that is brokerage owned. So they don't have to worry about it being sold to Zillow, to Lone Wolf, to Compass. And also we've got a 2-year game plan on what we're adding to the mix. It was inclusive of mortgage and insurance and title, so that we have the end goal of the consumer being able to close the transaction in the palm of their hand through our technology, giving the brokerages, as you alluded to earlier, some that say they can't make money, alternative sources of revenue via mortgage, title, insurance. So that's the plug and play model. We want to be supporting the absolute best independent operators around the world, giving them the technology, giving them the marketing, and giving them the culture and community to be a part of other locally owned and operated companies around the country and around the world, so that we can communicate and collaborate with one another to build the strongest luxury network around the world.
Right on. All right. So here's the interesting thing, guys. Like, as you're talking, especially as Thad was talking, I kept thinking Compass, right? Because it's like the same story, tech enabled, etc. Obviously, you're not Compass, and you know Compass well because you're in Chicago luxury market, and let's face it, like at properties compared to them, you're flying a little bit under the radar.
Correct.
At the same time, like look at what you've built. So.
We are. Here's something that is true.
Yeah,
we
like,
are
what's
the
the
original.
difference?
So here's what happened, is that I think Robert caught some of our videos and some of our office meetings and some of the things that we were doing, and raised a truckload of money and tried to do what At Properties did organically through culture and responsible business development, and tried to build it as a roll-up. And he succeeded, and he brought it public. Now, we can all say that was at the demise of the agent and the economics of the industry through the Compass effect. We can say that, with the class action lawsuits, he took advantage of agents by having them invest in the losses. And they're now, as you're seeing from the latest lawsuit, had a 75-80% loss on investment. You can judge it however you want it, but he has succeeded, however he did it, into rolling up brokerages and rolling up agents to become a really large company to take it public. Right. And now, 70% correction, and we'll see what happens with the downturn, which I don't think it's sustainable. He did look at everything we did prior to opening. We stayed the path, and we just stayed it didn't affect us, and it didn't change our model and our growth trajectory. But one way I would just say the big difference between the two companies, one is a responsible financial model that can withstand the test of time and can sustain itself through the ups and downs of not only the cyclicality, but the macroeconomic trends over a 20-year period. And the other was kind of like a fast, get rich quick, raise a ton of dough, do a roll up, have market share, and then think about how to make money with it later. Kind of like the WeWork model.
So is the difference
that's
really
the big difference, I think.
I mean, so it almost sounds like the difference here is that, like to Mike's point, you guys are brokers. You came out of the industry. You've been brokers for 22 years. You started with the two of you in a room. Whereas Robert, is coming from the investment banking world, right? He's not really from real. I mean, so like is because the attribution, the difference, like you said, we know that the story of Compass, that they go and they offer these huge cash rewards, these incredible splits, where you're saying like at Properties, you don't have to do that because why?
Well, I think one thing to note too is the point you just made is a good one. We actually have been brokers for 26, 27 years. We started out as a small company, started our own, and we built it responsibly over time. I mean, people will say we grew quickly, but we grew at the pace that was comfortable for us. We made our mistakes and we figured things out, but we've always been profitable. We've never had a year that we weren't profitable in ups and downs. Mm-hmm. So we've been very, very careful to manage it. And, you know, the big difference between us and the Compass team is that they don't have people from the real estate industry. They didn't build it fundamentally understanding how the business works. They went out and bought a ton of market share. And what they did was brilliant. I mean, if you look at what they put together, how quickly they did it, the fact that they got it public at, you know, even at the $2.5 billion valuation that they're at right now, I mean, you know, you can definitely mark that as success. But when you think about, you know, how their business model works, it financially, they went out and bought market share, but they didn't care about the bottom line. It was all about buying revenue, without a thought of, okay, how am I going to take that revenue and make a profit off of it? And I think one of the big things that you really need to understand in this business is we work on razor thin margins. You have to manage to the nickels and dimes in our business, and you have to be really aware. You can't give away the farm to everyone and then hope that you'll make it back later. There's really only one path, and they've said it now. There's only one path for them to come back and actually make a profit, and that is by changing the agent splits, by starting to reduce what they pay the agents in order for them to keep more money internally. That's incredibly difficult to do because once you bring agents in, they don't like their splits changed, not going down. They only like them to go up. So you have to figure out a model that works where you can provide service and value, but then also have a model that works where the agents are not going to feel like it's getting built on their backs and that their money is going to be taken from them. So it's a hard line to walk. You know, I think we've done a good job of walking it over the years. We've always been very responsible and thoughtful about how we're going to build the company. And the other thing we've done that's a little different, you know, Compass has talked about this technology solution. I don't know how many engineers they have on staff, but hundreds at least.
Like 300, I think. Yeah.
Yeah, and they talk about building this. That they're going to build this great technology solution. And what they've really done and they've bought tech companies, they've bought solutions, and they tried to put them together. The reality is, like you said, we did it maybe more under the radar, but we actually built our technology from scratch. It's 100% proprietary. It's all our own systems. And we continue to build that technology to improve it and create a better user experience, both for the agent, which we've always viewed as our client, and now also the consumer, as we're doing more consumer-facing pieces. So, you know, there are some differences and some nuances between the two companies, and I think over the long haul, it's a little bit of the tortoise and the hare. We may be a little slower out of the box in some ways when they are, but in the end, you know, we feel like we'll win the race.
Sure. But, you know, now it occurs to me, like, I think I saw Thad on a panel like a few years ago when Compass was scaring the living shit out of everybody. And I remember, Thad, you saying that you've gone head to head with Compass, because you're exactly right. From a brokerage standpoint, that model of just giving away the farm doesn't work. Like, we get that. At the same time, because agents are independent contractors, if somebody comes along and offers them all this stuff, you know, you always have to fight for it. Thad, I think you were saying, like, you've gone head to head and you've won, and without having to give away the farm. Like, talk to us about that. Like, what happened, and what's the strategy that's worked where you don't have to give away the farm, despite the fact that there's a Compass out there saying, sign up and here's $1 million signing bonus.
Yeah, I don't want to say that we haven't felt the Compass effect, which all brokerages, independent and corporately owned, have felt since Compass started, by the margin decline, which I always felt like there was really nothing being added to the consumer. And anytime you take away, you say, hey, you know what, we're going to do something that grows our company that doesn't benefit the consumer, I don't ever think that's sustainable. So at the end of the day, we were affected like everybody else, maybe not as seismically, primarily because, number one, we have a better technology solution. So agents that went there didn't have this, aha, boy, this is great. And so when other agents would talk to them on how it is, they'd say, hey, I got this check, but it's a little bit harder to operate. Number two, you can't buy a culture. Like, you can't buy an identity. I suppose you can buy a Porsche and drive around and look cool, right? But then if the person, sooner or later, you got to talk to the person and see if they like you. And we build a culture one person at a time, one agent at a time, one staff member at a time. And in reality, we've always hired everybody that has had a history in the business, which I would talk about. One of their biggest defects is that I think that they didn't value industry leadership. I think because they have incredible pedigrees when it comes to academia and great resumes when it comes to capital markets, but they didn't really look at kind of real estate because the low threshold of entry and leadership in real estate in the country. They never brought them on as CEO, CMO, COO, CTO. Nobody that really understood it, which I think cost them $1 billion. Because I think a lot of the things that they did wrong, they could have gotten answers to that quickly, actually, if they had actually embraced it. But on our end, I think that the main reason why we didn't, we were able to go head to head and at the end of the day win. Right now, we're taking more agents from Compass that are going to Compass, was because we have had an authentic culture revolving around love and community that is based on value to the agent through our training and coaching, but also to the end consumer. And we also have better collateral materials and better technology. So at the end of the day, there is not one single category of the brokerage that they're operating that they're winning or they're doing better than us. And if they do one thing better than us, we'll recreate it and make it better than theirs. So the one thing I love about Compass is that they elevated the game and forced everybody to operate at their most optimal speed. So we've had the greatest amount of innovation and thoughtful leadership in the last 3 years. And that is because Compass. And I would say before Compass, there were a lot of people that were doing great, maybe getting a little lazy, not really thinking about doing things different. And Compass whacked everybody in the face and woke them up. Some people sold their company to them because they didn't have enough gas in the tank. Other people on the further extreme said, all right, let's fire this up. Let's go toe to toe and beat them. Then you have everybody in the middle. But at the end of the day, two things happened. One, the end consumer is going to experience greater efficiency in the market in transacting in real estate, number one. And two, at the end of the day, the agent's going to make more money. So the business model has to change to remain solvent and profitable, obviously. But those two things happened. So it created a more efficient business. And I think that at the end of the day, that's good. It might not be great for the corporations or the companies or us as broker owners necessarily, but if we refine our model, it forces us to think differently on how to do two things: enhance the consumer experience and enhance the agent experience.
All right, so I feel like we're beating up on Compass a whole lot, and that's not the intent. But it's because you mentioned tech. It's like, oh, this is, and look, let's face it, Compass is, I think the last time I saw, they're the largest brokerage in the country by sales volume. So, when you're number one, when you're the king, the rest of us are going to talk about you. I don't know.
It's always, life is always
it ain't
easier
personal,
if you're number one. Yes.
That's right. It ain't personal. It's because you're number one. But just talk a little bit more generically, because this is the part that I was real curious about. Excuse me. As you mentioned, Mike, brokerage business, razor thin margins, right? No matter how responsible you operate, it's just razor thin margins. So, because you're not a public company, so you don't have to disclose any of this. Let me just ask you guys straight up. Can ad properties operate profitably without ancillary businesses? If you had no title, no escrow, no mortgage?
100%. Yes. And we always have. When I say we've always been profitable, we've always been profitable without any ancillary business. If anything, the mortgage business right now is dragging you down, not bringing you up. If that business is so up and down, you have spectacular years and then you have rough years. This is a rough patch for the mortgage business. Title is a great business. It's, we've had title now for, I think, about 9 years. We got into it. People would say we got into it a little bit late, but we got into it when we were ready to get into it. And it's a great business. It's a great ancillary business, but our core business is still brokerage. And, again, it's thin margin business, so you have to manage it carefully, but we've always been able to figure out a way to manage our brokerage business in a profitable way. I mean, otherwise we wouldn't be able to do all the things that we're doing. Right. We wouldn't be able to bring all the innovation and the technology and the value proposition to the table. And we're very competitive. We're competitive on splits. We're competitive on pricing. We're competitive everywhere, but we're also very, very efficient. And I think that's where some brokerage companies fall down. They fall down on their efficiencies of their operation, and they have too much overhead, and they don't manage it well. Right. It used to be office space. I remember we looked at a company, this was back in 2009. We looked at a company that was on the market. They were the same size as us, same number of agents, same production, same everything. And we looked at their office overhead. And at the time, their office overhead was 10 times ours, just office rent, which obviously you get no real return on. So obviously, I think that's become more efficient now, but there's still a ton of inefficiencies that some of these companies operate in. And we are very good at looking at every area of our company all the time time to make sure that we are able to provide the best service, and we're never trying to cut back in areas that are going to affect both the agents and the consumers, but we always have to be looking at the organization from an efficiency standpoint and find ways to automate, to cut costs, and to do things that aren't going to affect the experience, both, again, agent side and consumer side.
So, if you don't mind my asking, Steve Murray's famous for saying that brokerage margins across North America is 3% net profit on average, which means half are below, half are above. I mean, I'm assuming you're above, because otherwise Steve wouldn't have asked me to say, you need to talk to those guys. Like, could you give us some insight, like how much above, like what do your margins look like net?
And, you'd probably have to buy us to get that information. It's not for sale, I'd say. But just say we operate efficiently, and I think that we're probably in the upper end of the margin range for this business. But again, that doesn't mean it's very, very high, because business margins aren't. You're never going to see a 20% plus margin in a traditional brokerage business. It's just never going to happen.
So, and one thing it would be like, bottom line is that we were profitable in 08 and 09. So we could absorb that type of market correction, remain profitable, and there was never a year up to that point that we had ever opened more offices in a single year than 9 and 10. And all of that was done through reserves, not debt. Right. So, that's the secret of brokerage, is that you can't just be profitable when the market's with you. You got to be profitable when the market's against you.
Oh, we're good. This is why I can't wait to have that conversation, guys. That's a big topic, in the industry. But before we leave the brokerage thing, I mean, I guess I'm curious, like, because you said about overhead, et cetera. Like, what's your take on EXP, right? Because they're the fastest growing, and their big, sort of innovation is we're virtual. We have no office space, right? And I think you guys still have some office space. You're not. You're much more efficient.
We're traditional from that perspective.
Yeah.
Yeah, so I'm still a big believer in office. I think EXP is the true, like, if Compass sucks all the conversation out of the market, I think what Glenn did with EXP was genius. I think that that's true innovation. I think that everybody should tip their hat. He doesn't have the personality to go out there and try to drum up applause. But what he's done, I admire. Like, I admire true disruption, even if it comes at our expense. But that's somebody doing something authentically different. He is the smartest guy in the room right now, and he's doing great. I don't think it is a solution for all agents. You're going to have extremes, right? You're going to go to EXP and get very little benefit to the consumer. Okay, it's all going to be on you. Well, it's EXP, Remax, Keller. They rely on the agent to come up with their solution to provide a quality service to the consumer. All the way to, let's say, at Properties, Christie's International Real Estate. We have all the bells and whistles, all the product differentiation, all the technology, software, agent-facing, collateral material, physical also space, all those expenses. And it costs more to operate there, but theoretically you can generate more business and have more repeat clients than you will if on the other side, and you have everybody in between. But what he did and what he has done, I think, is fantastic. He also has a software piece that really gave him a big blow up about 24 months ago on the market. If you see that big run up when COVID happened, that's because his software company. So, but I still think that what he's doing now, let's be honest, it's a lot like an airlift from the Keller Williams. It's kind of like, hey, it's whether you call it the Amway model or pyramid. If you're an agent, you come over, you can make money from this agent. That's the same thing that Keller Williams did and Amway does. And some people, talk a lot of trash because of that. But, there are very, very few original ideas, right? Right. And so if someone's able to regurgitate an old idea, wrap it up differently, generate a culture and momentum, take it public and show growth, that is something to tip your hat. It doesn't always have to be a brand new idea. You can just have somebody doing an old idea better.
So two things about that. One is, like, are you guys thinking about doing like a virtual offering, like the way they are at all?
No, our whole side of it is the Christie side. Like that's our adventure. And there, that we can talk about that later. But that is, he's doing what he does, which is, I would say, low value proposition, high agent net. Ours is high value proposition to agent and consumer, which we are heavily focused on the consumer, which most brokerages are not. That does have a fair price for the agent. And theoretically, the agent will have to say, I can't do what they do better for equivalent or lower cost. Right. Therefore, it's worth it for me to be with at Properties Christie's.
Right. And the second question, go ahead. Go ahead, Mike.
The only thing I'd notice is if you look at EXP and like Keller Williams, those models Remax too, because that was sort of the original model, more similar to that model type. They have a hard time servicing the luxury end of the market. They have a harder time servicing the upper, because consumers at higher price points have a much higher expectation of the service level, the collateral material, just the whole experience. So I think that's the big difference. I think that those companies thrive in certain markets and they don't in others. If you look in Chicago, they don't have much penetration in the Chicagoland marketplace.
Right.
If you look at other markets that we're in, if you look at the Atlanta area where the price points are higher, if you look at Northern California, which we're in now, again, those companies tend to have less penetration in some of those markets because they don't provide the service level at those price point levels. But it is a brilliant model for certain markets, and obviously it's been incredibly successful.
Right. And that was actually, you went exactly where my second question was, Mike, which was, all right, at Properties, Christie's International, you're clearly a luxury market broker. So it almost feels like your model also then conversely can't really work in, third class, like suburban, below median price areas, or can it
No, we provide too high a level of service. If you look at everything we do for every single listing, because we provide the same level of service in all of our listings. If our average price point was $150,000, it wouldn't work. We just couldn't. We're spending too much money on the listing for the net commissions that we're going to receive. It doesn't work. It is, I feel like in this business, you have to know who you are and know who you're not. We're a full service brokerage model. That's our model. So if an agent wants to get here and get 100% split, it's never going to happen because we can't do it on a fee for service type basis. It's not who we are.
Do you guys think that the industry evolves that way, where maybe full service brokerage, really, ends up in the luxury segment, and then everybody else ends up going to something like an EXP, where really the price points just don't justify the high level of service? Or Thad's shaking his head. So talk about
no, because everyone is aspirational, right? If you're a $500,000 home, that home is your home, and you want to be treated the same way as $1 million homeowner is treated. And a lot of these services are actually very scalable, and as you go with high volume, have a reduced cost. Like from our Christie's side, all the things we are providing, from the technology to the collateral material, will be less expensive for the independent broker than it were if they were signing up for Coldwell Banker. And they get a better brand. So we know that moving into that side of the market, that we have to provide more for less, right? That's how you penetrate a market and grow scale quickly. So at the end of the day, no. 300,000 in some market is very nice. Some other markets it's very entry, but they want to be treated like, they want the same experience as everybody else, as everybody at the high end. And if you're a broker agent, here's where I would argue the integrity. You want that consumer to have that same experience. If I'm an agent and I don't care about the experience of the end seller, and I can say, your home is only $350, I don't have to do that much for you or give you that much, I'm not a great agent. The best agent is the agent that wants to give the $350,000 seller the experience of a $3.5 million seller. That's how that agent grows their business. So giving them the EXP or the Keller or the Remax or the, mismatched, not organized, integrated tech with marketing, et cetera, that end consumer will feel it. And so that end consumer is going to want one thing. They're not going to want to pay the same price as the full service broker. That's where I think you'll see the squeeze at the end of the day. Because right now, the brokerages the last 10 years have not been focusing on the end consumer as they should have been, in my opinion. So you'll see the big difference there is the end consumer is going to want more, because that's all that info is available to everybody.
So last question for you guys on App Properties, the brokerage model, just for the brokerage audience. And then I want to actually talk a little bit about macro, because you guys have such a fascinating story there. One of the biggest things that I've been hammering for the last 10 years, I think, is been the real growth of agent teams at the expense of brokerages. Right? Do you guys have teams, number one, at App Properties? How have you been able to deal with the sort of growth and power of teams, again, at the expense of brokerage? How have you been able to manage that?
I don't know if I'd say it's at the expense of brokers, but it's adapting. This business is going to constantly be evolving. The companies that don't evolve with the business aren't going to survive. Agent teams are part of our future. That people have figured it out. They figured out how to create a model for themselves. So we've embraced teams. We have specific training and coaching for team leaders. We have programs for team members. It's a part of our business, and we've always kind of had teams. And in fact, if you look back to Thad and I, when we first started selling back in the 90s, when we first started working together, we were probably, what you would consider a team back then before there were teams. So we understand that model. We've lived it. And, we feel like you have to embrace it, because if you don't embrace teams, I don't think you're going to have much of a business long term.
Thad, we were a team. I mean, we were partners. We had 2 assistants. We had agents that helped us with sales. We didn't know we were a team. But when we started we always encouraged our agents to grow as entrepreneurs by creating an environment that they can service their clients at the highest level. And as your volume increases, you inevitably have to bring support around you, unless you're a superhero, to give your clients efficiency and speed.
All right. I don't want to miss the opportunity of having the 2 of you guys here to talk about some of the bigger topics, in the industry. So one, right, just because of what happened over the weekend and what's been happening the last couple of months, macro is like the story right now, right, in housing, in real estate. And I don't know that the residential industry, at least, has been paying a lot of attention to that, right? I mean, you've got the Redfin economists and you've got Zillow economists, but, out of sort of the brokerage side, I don't know if we've heard a lot from leaders. So let me just ask you, what's your macro outlook? Well, actually, let's step back. Number one, 2020, 2021 has been unbelievable years. I mean, it's just been insane. Like, we can all agree on that, right? Sort of counterintuitive when COVID first happened, but, like real estate just went straight up into the right. Okay. And then starting this year, here comes the Fed. We're going to raise rates. We're going to tighten. Mortgage rates start spiking. Everything is really chaotic. And then the May CPI print just came out at 8.6. People are freaking out. Mortgage bonds just went no bid. People are freaking out. Like, as leaders, as CEO, like, what's your sort of macro housing outlook right now for let's say remainder of 2022 and into 2023?
The only thing I can remember is, back in the Great Recession, prior to that tanking, all of us were making excuses and valid ideas or hypotheses on why the market wouldn't crash, right? Thankfully, I think we were very aware of that, and we lived that in a youthful age, that we could place it over the last 12 months, because all we've been talking about internally is adjusting everything to be able to rock a correction. Right? Mm-hmm. Because people that are saying that there's not going to be a price correction, people that are saying because of low inventory, we're going to maintain the same pricing, people are saying, coming up with those same excuses to maintain an irrational market, were the same things that actually we participated in coming up with back in 08, 09. So we have not been jumping on the bandwagon of that. We've been reversing from a soft landing to a not a crash, but a rocky landing, a bumpier landing. And I think what's going on right now today is great, because when you get this level of modification in the market, and it's about, markets are psychology, right? How you feel is what drives a market more than anything else. Your consumer sentiment drives whether or not you spend or not. So being whipsawed like this is actually really good to put people back in a rational spot, because they were in a irrational spot, and a lot of people, agents included, felt incredibly wealthy 6 months ago. Well, now we're correcting. And I think when you come in these types of turbulent areas, or when you get the greatest amount of innovation and the greatest amount of reality, who's actually really realistically providing value and who's not. And I think that's what you find out in times like this. So it's actually a good thing, I think, because sooner or later it had to happen. And I like bottoming out fast and getting on a road to recovery. I don't like a slow bottom.
Slow burn. I mean, I think we all have to remember, we're in a cyclical business. We talk about it, but people forget when things are going up, they forget that things come back down again. You're right. It's been irrational the last 2 years. In the Chicagoland market, the market volume was up 50% from 2019 to 2021. Wow. And 2019 was a good year. So, it's irrational to think the market's going to keep growing. We actually welcome some of the challenges in the market because we see them as opportunities. It's opportunities for us to do things different, do things better, and maybe we won't make much money on those years, but we'll be able to grab more market share. And then when you come out, it gives us an opportunity to grow even more. So we look at these as opportunities, not as, oh my God, the sky is falling. What do we do? And we're prepared for it. We are talking to our agents constantly. We've been talking to them for months and months about, getting rational and understanding that they were going to work harder to do less business this year. And, I think the ones that understand that and embrace it have a realistic picture, and it's good for them. There are people that are struggling, and then there are companies that are freaking out a little bit. But if you thought your 2021 was a new normal, you're living in la la land, because it was a great year that we all experienced. Everyone did well. Agents made a lot of money. Brokerages had great years. Great. We had one awesome year. Now we're back into a normal market, and we're going to see some shifts and some cyclicality. And if you look at it as an advantage, and you look to take advantage of it. But neither Thad and I see some massive housing crash. If you look at 08, 09, where we kind of created it, everything was overpriced, over-leveraged, and overbuilt. And we're kind of none of those things right now. Pricing's up, and yes, pricing may be a little bit irrational in some areas, but we're not overbuilt, we're underbuilt, and we're definitely not over-leveraged. So, we think we'll be okay, but you definitely have to adapt as things change, and we're doing that constantly here.
So what do you guys, you're right, the market's been, nuts. I think February print was 20% year over year. It's sort of slowed a little bit because the Fed started raising rates and started acting. But I think the latest number I saw was still 14% up year over year. Are you guys expecting that to be down by the end of this year? What's your prediction for end of this year? Are home prices still up year over year? Or are they down year over year?
I would say they're going to end up being flat, only because remember we're operating about a 60-day arrears, right? So the closings that we have in the month of June are really put into contract in April. Mm-hmm. So, we're going to see the consequence of the significant increase in rates now, the second half of the year. So I would say that at the end of the year, if we're flat, it wasn't a crash. But I think that everything has to remember in real estate, the 1% can only drive the market for so long. The top sales in San Francisco, New York, Miami, that can only drive the market for so long. What drives the market is first-time buyers. And you just had the majority of first-time buyers eliminated from the market for two reasons. One, appreciation in housing was too fast, and the price got too far, and then you had a rate increase. Normally, when you have that type of appreciation, you're creating more mortgage opportunities for them to get more leverage so people can put down less. The opposite just happened. Prices went up, interest rates went up, fewer programs, less risk. You're going to have far fewer first-time buyers. That's why you're seeing rental prices go up simultaneously.
Mm-hmm. Speaking of that, so that's the next sort of big macro topic, right? Because housing affordability is it's not like housing was affordable in 2018, 2019. It wasn't like we had a bunch of millennials going yay, I can finally buy a house. They were struggling then. And then we had 2020, 2021, and it's just absolutely insane. So Thad, you're exactly right. And things are about to get worse. What do you guys, are you sort of insulated from that because you're Chicagoland luxury market? So, the type of first time home buyers, we're talking wealthier, higher income people. No, you're still feeling and seeing the effects of that dynamic, right?
100%.
Yeah, Mike, you want to talk, our average sales price is not, Chicago is not Miami, Manhattan, Beverly Hills, or San Fran.
Yeah.
But we're still going to feel it. We're still going to feel it across the board. There's no question. So
given that, what happens to housing affordability the rest of this year? If it keeps getting worse, then I'm in this debate on Twitter, right? I'm like, we need to stop referring to home buying market as the housing market, right? Yeah. I'm like, look, the Fed can crush home buying demand. They can't crush housing demand because the need to have a roof over your head, for your kids to sleep in a room, that's not going away because so you're going to rent, right? And rental prices are now up 19%, 20%, whatever. Are you all seeing that, I guess, in kind of the market you're in? That's one question.
Yeah, the one thing to remember is that we're a very young country, right? I think we have oftentimes to get we're kind of like America is sort of an adolescent, if you view it like that in comparison to the rest of the world. Adolescents have a tendency to be a bit narcissistic and arrogant, right? Well, I mean, our housing cost has been historically very low in comparison to the rest of the world. If you look at Europe, for instance, people spend 50% of their income on housing. So when we were spending 25% of our income on average on housing, that's kind of what you used when you were buying a house, you're seeing that slowly ratchet up to about 35% now. So as time goes on economically, our economy has started to become more similar to the other countries around the world, not the extremes, but to the general center of economic quality of life in the world. And, America's been pulling towards that magnet for the last 50 years. So I don't think that's going to change. I think people got to get used to spending a much higher percentage of their income on housing. Big problem, of course, is quality food. When you start doing that, you see people subsidizing that decision by eating at McDonald's. And because we don't have high quality, nutritious food for people at affordable prices, unlike a lot of other countries, you're seeing obesity and a lot of these other things that feed into our highest average healthcare cost around the world. I mean, we spend more on healthcare than any other industrialized nation. And I think we have the 13th when it comes to longevity. So America's got to figure out some big problems. We're a beautiful capitalistic country, and I'm a big capitalist, but some pieces of it, like healthcare, for instance, when we're paying more for prescription drugs than anywhere else in the world, and somehow our politicians dig that and don't change that because of the lobbyists and the campaign finance, we've got to figure out our politics, figure out campaign finance, get rid of a lot of the lobbyist sides of it, and get rid of the politicians having to kowtow to whether it's the NRA or the pharmaceutical company to end up either killing Americans quickly or slowly.
I'm gonna come back to that, Thad. I didn't think we're gonna delve into there, but
fire away, Rob.
Here's the thing that I've been worried about the most, and I'm working on a piece right now. Given that dynamic, I'm not sure how we avoid rent control. Do you guys worry about that at all? Especially like Chicago, especially it's a large blue city. I don't know if Chicago has rent control. New York does. LA, I think, just instituted it. San Francisco's had it for a bit, but it's not widespread like New York. Do you guys have that, number one? And number two, do you think it's going to increase? Again, as this year continues, housing becomes affordable, rents keep going at 20%, to political pressure to be like, hey man, we need to just cap rents. Like, do you guys see that? Or are you thinking about that at all?
Well, you think capping rent is like a linear solution, right? That somebody came up with a long time ago. But whether it's capping rent or minimum income or subsidizing, at the end of the day, when you have this much inequality and that much spread of population, you don't have enough people that can support the economy. The top has to end up funneling and supporting the middle so the economy can still grow without a fundamental macro shift. So you have to have something like that. There's no alternative. Nobody has a better plan. Trickle-down economics has never worked once in the history of America. And so we tried it again. It didn't work. And so now we're kind of dealing with the repercussions now. And somebody either has to come up with something really innovative, or you have to keep feeding the system as the system isn't going to change right away. What do you think, Mikey?
Any thoughts? Yeah.
I think rent control is tough. They've tried to pass it in Chicago a couple of times, relatively recently. They have not been able to get it through here. But it's difficult because, just the cost to build right now is so high. We do have an affordable housing requirement in all new construction now, like apartments, condos, or what have you. But it's about 20% in most of our markets here. But it gets very difficult. If a developer knows they're going to lose money when they go and build something, they're not even going to try. So, and we have a lack of housing. So it's a tough one. I see it from both sides, but I don't know how you enact rent control, and particularly like cap rents. If it costs more to build them than you can receive, then no one's going to build them. And so unless the government comes in and starts building it, and that's never worked out particularly well. I don't know exactly what the solution is. But
keep in mind, like I grew up in New York City, so I'm a firm opponent of rent control, and I think it's the dumbest. I think who was it? There were some economists who said the most effective way to destroy a city is first is nuclear weapons, and then the second is rent control. So I'm a firm opponent of rent control. However, I'm not saying it's a good idea. I'm just looking at the politics of this, right? Looking at the economics and looking at home prices going up 20%, rents going up 20%, wages haven't gone up 20%. We're about to enter a recession, so wages are actually going to come down. And I'm like, yo, I don't. And again, politicians are going to make some stupid decisions because they want to win re-election. Rent control seems like the easiest thing for them to just go out and promote. So, obviously something like
but
that happens.
A housing cost stipend that's directed towards a landlord or a mortgage, it's the same thing as rent control, but it's fueling cash directly into the economy that grows the economy. So, that's all an equation that you can put into a calculator to figure out if that much feeding of the economy regurgitates into a more productive economy.
Maybe.
But, it's different. I mean,
maybe.
You
it's
can't.
a better idea, perhaps. That, right. All I can think about is, I think about like these socialist millennials, if they hear that City Hall just wrote a check for $300 million to, some big developer, that ain't gonna fly. Even though rationally, it's like, wait, it's the same thing. We're just subsidizing
It's the same thing.
All right,
one feeds the economy, one restricts the economy, right? You think you do because you keep the cap there. But at the same time, everybody wants to get rid of homelessness, right?
Right.
So the same people that don't want to do anything are the same people complaining about the homeless problem. So here's what I want. You force the people that complain the most about the homeless to come up with the
They
the
should have to
put it on them.
Person. Yeah.
There's a lot of people that
extra
complain
bedroom?
that can't come up with an idea.
Listen, I want to be respectful of your time as well. And there's one other major topic I kind of wanted to cover, which is, it's funny. I've been talking about this commission lawsuit ever since Merle was filed in 2018, I think it is. Recently, we're starting to see this come back up. And I feel like for years, people are like, whatever. They're too busy, selling houses because the market was absolutely crazy. Recently, we're seeing this much more in the industry's consciousness. Are you guys worried about that lawsuit at all? Do you talk to your agents? Do you have any strategies around that? If the plaintiffs, I think it's called Burnett now, it was called Sitzer out of Missouri. Merle's obviously in Illinois, which is where you guys are. If any of those things happen or the FTC come in regulation and essentially do with cooperation compensation, do you guys strategize around that, talk about that at all?
It's almost like something you can't really deal with until it actually comes to pass, because you don't know how it's going to turn out. Right. Obviously, if you look at the extreme and the lawsuit succeeds and they make brokerage companies pay back all of the buyer commissions, every brokerage company goes out of business.
Totally bankrupt, instantly, everybody.
Our industry's over. And, the other thing about the cooperating commission, Thad has talked a lot about this. So if you eliminate the cooperating commission piece and now you make buyers pay it, how are they going to pay it? Most of them are still struggling to get enough down payment to be able to get their mortgage. Now you have to tack on another whatever percentage it is. I think it becomes almost impossible. Right now, it's not financeable given the mortgage regulations. So I guess you could change some of the mortgage regulations, but right now you couldn't finance it because the buyer can only finance a very small piece of the money they have to come up with going into a mortgage. So it would change the industry overnight, and it would make it incredibly difficult. It would change it instantly. And if you look at it, it would make our market incredibly inefficient. We now have. We have affiliates now all over the world. And I talked to, the woman who runs our international group actually lives in Paris. She's looking for a place in Paris. She has to call each brokerage company and find out what they have available and see if it fits her needs, because there are no buyer brokers over there. Right. So if you eliminate buyer brokers because there's no way for them to get paid, you make the market incredibly inefficient. It hurts sellers, it hurts buyers, it hurts the market as a whole. So I don't know that you can really fully prepare for it until you start to figure out where it's going to end up, which I think we're pretty far away from. Because as you know, we're 4 years in and we're still in the second or third inning.
Yeah. Thad? Anything to add? Do we lose Thad? And there he goes. All right. So while we're waiting for Thad to return, I think, I think I'm one of the guys that's, most sort of doom and gloom about this topic. And it's not because I want this to happen, right? I'm like, look, you're exactly right. I'm just saying, like, the courts are going to do what the courts are going to do. The bigger concern, and I've been saying the timeline's been pulled up, I think the FTC is going to act long before the courts do. So that compressed the timeline significantly for us. And there are a couple of developments like the Biden executive order, telling the FTC to regulate. Nothing's happened. Well, big part of it is because the FTC commissioners were 3-3, Democrat, Republican. Now that's been changed. Now it's 4-2. So now Nina Khan and the FTC can start doing some real action against the big tech companies, against oil and gas, or against whoever, right, that they want to go. And real estate is definitely one of them. So I'm like, all right, look, it's the timeline has now been compressed to 2-3 years. I was just curious, like, if you guys were having conversations internally and with your agents about, look, if commission goes away, here's what we're going to do. Because that's something that most brokers they don't know. Like, you're exactly right. The entire fundamentals business completely change, probably for the worse. But just like rent control, it doesn't matter if it's probably for the worse. For politicians, like, hey, if it's an easier talking point, I'd rather do that. So do you guys talk about that?
We talk about it, but think about it. Think about how much the real estate industry is a part of our economy. Sure. Except for 08 and 09, when we brought ourselves into a recession, typically real estate takes you out. And residential real estate typically take you out.
But we're a third of the economy.
So if you essentially destroy the residential real estate industry, I mean, I don't know, now you're talking about sort of an earthquake throughout the entire economy. So maybe I'm a little more of an optimist. I think we'll come to a reasonable solution, so I don't think it's going to be a tsunami or earthquake, but I definitely think there's going to be some pain involved. You're going to have to adapt once you kind of understand what's happening there.
What the rules are.
I don't think we really have enough understanding of the direction they're going to go, and I think it'll take some real time. Right. And again, optimistically, I think that maybe they put more disclosure rules in place. There's more information out there, just like our business has evolved. Think about how the consumer information has evolved our business. It'll evolve, but I don't think it'll destroy it, because I think ultimately politicians will be totally screwed if that happens.
Interesting. All right. Thad keeps wanting to come in and out, and
I don't know. We're on a different floor right now of our office, so there maybe like an internet issue up there. So
it could just be, who knows? The market could be going nuts. Oh, he's back.
There you go.
Hey.
He's back.
Hey, he's back.
For a second.
Thad, did you want to add on to the legal and regulatory risk issue before? Because I do want to move on.
I think if there are some smart people in the room, they understand the repercussions of this case, dismantling an entire industry, making homes unfinanceable across the country. And Mike, I heard him talking about it. Housing brought us out of the Great Recession. It's brought us out of every recession. The government actually created incentives to have housing bring us out of the Great Recession, because housing caused the Great Recession. You cannot go into a slowdown and then blow up the entire housing market of the United States of America, unless you are like, that would be there is no one that's stupid to do that. You couldn't put someone in charge, aside from maybe Satan, who would do something like that. It would be one of the worst things you could possibly ever do.
I mean, I don't know. Because to your point, every other country other than Canada, right? They kind of work that way.
Well, not entirely. There are countries, now that we're getting a much more breadth of experience, there are countries that do have buyer brokers out there. But definitely a lot of these other markets are very inefficient. But there's far less turnover, too. If you go to European countries, you buy a house and you live there for 25 years.
Right.
You don't have the level of turnover that you have here. And, and their economies are different. But it would essentially ruin the U.S. economy if that were to happen.
Yeah, I mean, look, I think it's
turnover. Because of our turnover, think about furniture sales, everything that goes into a home sale. The peak of a consumer's spending is it directly tied to, number one, moving. Mm-hmm. So you start slowing down the way and the pace in which people move, that trickles through the entire economy quickly.
Oh, I don't doubt it. Look, again, this isn't about policy, what's the right or wrong policy. I'm firmly convinced the government tends to do the absolute worst possible thing, but I'm a cynic when it comes to government action. All right, let's move on, because there's one last topic that, because you guys build your own technology, it's central to your value proposition. I guess the question I have is, it's not about, sort of the other sort of startups in Silicon Valley. It's more about like the industry's usage of technology and advanced technology. I don't really feel like in the last 10 years, right, we've seen this huge leaps and bounds of like technological breakthroughs. In other words, like there's incremental improvements, and I'm sure I've not used your system, but given your success, I have to imagine it's one of the best out there. But it's like CRM, transaction management, marketing platforms, et cetera, et cetera. We haven't necessarily seen like this next big jump, that some were expecting when the internet first came around. Like, oh my God, this thing is the craziest, new technology. Like, what do you all sort of, number one, what do you think is the reason why it has it? Like, what are the barriers to technology development? And then two, what do you sort of look forward to coming down the pike say, oh, once this hits, oh my God, we're going to break things through to the next level of efficiency or service or whatever?
First,
let's start with you. Yeah. Barriers first.
I would first of all disagree.
Oh, disagree. Okay.
Because in the last 10 years, you've had more advancement in a vertical with consumer adoption and consumer control than you ever have in the history of housing. Now, it might have been a cooperation between public and private, but the private had to share the data with the public for the public to create the innovation to empower the consumer. And I would argue that was better because they were spending VC money and they were able to lose money by providing a faster consumer experience. So I'd say the last 10 years was fabulous for the consumer because they got everything from the Zestimate, they got everything from being able to shop mortgages. All of the information became transparent and they can search for homes, 99% of the homes that are available around the world in 5 milliseconds. So I love the public-private integration for the consumer benefit over the last decade. When it comes to the transaction, which involves mortgage, title, insurance, etc., there's nuance in every single state that has different rules, regulations. And I would say the one hurdle that has slowed this down has been the fragmentation of the MLS. So because you even have New York that doesn't have a centralized MLS, there was one shot we had. If Realtor.com would have been purchased by NAR when Rupert Murdoch bought it, that was the brokerage had a big miss there. Because then they bought that would have sped up the entire process and created incredible efficiency. Because the brokerage didn't do that because they were worrying about individuals getting rich as opposed to benefiting the industry, slowed us down tremendously. So, we're coming up with our solution. It's gradually as APIs think about that. Your solution, just to have data share, has to have an individual API with every single MLS in America. You don't think that's a slowdown and that's a challenge? If you were able to solve that, but it's not going to get solved, now I think the next phase is consumer interaction, but I think you'll see a lot of private companies go BK that come up with some good pieces that get airlifted for the end solution.
Okay. Mike, anything you want to add?
Yeah, no, I think Thad and I actually are on the same page there. Realistically, I think we've had massive changes in our industry from technology with the internet, advent of the internet. Thad and I started really before the internet was really there in our world, and it has changed the entire foundation of our business. It has changed from the real estate broker having the information, control the information, and that's you had to use a broker because they had the information, to now real estate brokers and companies having to create a value proposition for themselves and for their agents to make sure that people actually work with them. So I would say there's been seismic shifts in our business from technology. It's just relative. Our business, we used to joke that our business was a bit in the Stone Ages. So, you have to look at where you're coming out of and where you've gone to. But it's different. It's a different kind of technology versus like your phone. I mean, you think about how using your phone has changed. That is like incredible technology, but it's relative to what you're using. This is what you use. For us, it's a transaction where someone's making the biggest investment of their lives and they want to see it, touch it, feel it. So I think the technology has changed it dramatically. I still think we're going to continue to see that evolution, but I don't think you're going to have this people have tried it. Companies that have tried to change things through technology. And I think you'll see that you're not just going to have this one massive light switch flipped and the world changes.
So in my defense, I just want to, because, when I said it hasn't been huge innovation the last 10 years, sorry, Lucy, my dog is barking at the mailman. I don't know why she does that.
She's like, you guys have been on too long.
I know. She's like, God damn it. Stop, guys. And there she is walking around. I guess I was thinking 2011, 2012, because we had the internet by then, right? Zillow was already dominant by then. So what I agree completely. The internet's completely changed the world, and everything Thad said happened. I just think it happened before 10 years ago, right? Because so look at it from 2012 to now. I was expecting much more automation and stuff. The Brad Inman's latte vision thing, and it just hasn't happened. But to your point, Thad, it could simply be because of fragmentation of the MLS side. So on that, just one quick question. Something I've been pointing out, because, as you all know, I do a lot of consulting with MLS. That's my primary area. Something I've been wondering a while is I've been pointing out that if you look at the typical MLS, the top 2, maybe 3% of brokerage companies, so brokerage participants in that MLS, constitute more than 51% of the listings in that MLS. Just about every MLS I've ever looked at. Why don't y'all top 2% brokers get together and do something? If you wanted this national, like one single MLS Thad, it only takes the top 2 to 3% of brokerage participants in the country to just say, hey, you know what we're going to do? Why doesn't that happen?
In our market, that's not the case. If you have to get to, I think, 7 or 8, maybe 9 companies deep before you get to half the market. So in the Chicago,
I bet you 7 to 8 companies is top 2% of the brokerages. That's all I meant.
No, that's true. I mean, you have antitrust issues. So you have some things you have to worry about. And brokers kind of tried it here. There used to be this thing called MAP. I don't know if you remember when there was the MLS and there was MAP, and the top 3 brokers at the time, they moved all their listings out of the MLS onto MAP, and it created this, it created a lot of inefficiencies for the consumer. And that's part of the problem, is that you make that move, you create inefficiencies, you now create a strategic opportunity for the companies that don't do it to be able to compete, and it's very difficult to kind of get out of that loop.
Okay. Yeah, the only thing I would add is that anytime you come up with a solution that doesn't benefit the consumer, I would parallel just like with Compass. Compass about 40% market share in California. They said, hey, let's keep our listings private. Let's force the consumer to come to our website so we get all the leads, and then we can hoard the buyers and grow our market share. I'd say, how's that worked? That's not going to work. That will never work. Anything that doesn't benefit the consumer. And guess what we know about consumers? They don't even want to hang out on brokerage websites. They want to use outside. They want to use Zillow, Realtor.com, Trulia, even Redfin. They use Redfin as the best user experience, but very few people use their agents. So they don't, so that side of it, when it doesn't benefit the consumer or steps back, what you're talking about, the consumer progress, it doesn't really work. There's got to be a flick of a switch that doesn't change the consumer behavior or their experience, but gives them everything that they're expecting day one. All right.
Let's do a quick lightning round, and I'm going to let you guys go. Because again, I really do appreciate you taking time. You guys are extraordinarily busy, man. So quick lightning round, just, quick, initial reaction. What's your take on iBuying now in 2022?
You want me to go?
I think it works in some markets. I don't think it works in others.
I think an iBuyer is no different than the sign 15 years ago that said help you sell by the side of the expressway. And when you have that help you sell guy that understands the local market and has the relationships that are granular for that community, they're going to have better efficiency and be able to charge less and make more. I don't think it's a big deal.
Okay. What's your take on what do you anticipate mortgage rates to be in December of 2022? I know we're all just completely guessing.
Well, this will be cool because it can be recorded and we can at least bet dinner, and whoever's closest has to pay.
I'm down with that. All right, so we'll all 3 make numbers, and we'll go whoever's closest without going over. Is that the way it typically works?
No, just I think you're just closest.
Closest. All right. Whoever's
December
closest.
31st.
So write your rate down, and we'll put it up on screen.
Okay, hold on. I like that. Love this. Okay, ready? Okay, 1, 2, 3. Okay.
12.
Looks like I'm buying your gentleman dinner. So we had 575 from Thad. Was it
6.3?
6.3 from Mike, and I came out with 12%.
Well, if it's at 12, we're going to McDonald's or Burger King for dinner. So.
All right.
Splitting the bill.
Okay. 3. Quick. Just with Zillow exiting iBuying and they're focusing much more on sort of their basic portal business, do you think they end the year higher in their stock price or lower?
I would say higher.
See, and I think that as the market continues to constrict a little bit, I think that I think they're going to get hit like the rest of the real estate stocks. So I would go lower.
Okay. Again, lightning round. Is Redfin still around at the end of 2023?
Not if we can buy them. They got under $1 billion, and I was like, the best user experience ever invented in America for real estate. That's so cheap. That's probably the greatest opportunity to reinvent itself and pivot. It's astounding to me that there's been no pivot. It, to me, is the greatest waste of the best technology in real estate. If I were the board of Redfin, I would have quit a long time ago and asked for my money back, because that just, to me, I see the biggest, slowest pitch in the world that they have every day, and they just can't swing the bat.
Or it could be that Ad Properties goes and raises some money and sends a letter. Okay, let's see.
I don't know, Mike. Do you think their stock will be higher or lower?
Oh, well, he said that they're going to be around.
Oh, right. They're going to be around?
I think they'll be around. But I do think that there is an opportunity there. Someone's got to do it. At some point, someone's got to do it, because and at some price point, it's a great opportunity. But I think they're around. I don't think they go away.
All right. Do we see significant regulation out of the FTC before the end of this year?
Before the end of the year, I don't think so. But I do think it's going to happen. But I think because it's a midterm elections coming up, I think nothing gets done much before the end of the year.
Okay. So when do you think, like 2023?
Yeah, I guess it depends on how the midterms go a little bit. But so maybe not. But I don't think it happens this year.
Okay. Thad, what do you think?
That's not my wheelhouse.
Okay.
You know what I mean? That's a good Mike question.
All right. I have so many other things we could talk to you about, but I think, okay, last lightning round question. What are your thoughts on clear cooperation policy?
Well, doesn't that just go with the whole buyer lawsuit, everything?
No, this is an NAR rule, right? Where you have to list every property right within.
I like it. Me personally, I think that anything that benefits the consumer and provides transparency. I thought when Compass was trying to sidestep it, that was terrible for brokerage and the overall industry. And it's dangerous because it just yields a speed up in the breakage of the industry. And it seems like the way in the old days when brokers used to hold the data and that was their value proposition. If you have to go back and your value proposition was the same as it was 20 years ago after you had benefits to the consumer, you're going to lose. So I am huge in favor of brokerages cooperating with one another and bolstering up the whole industry. That's the problem. Too many individuals want to get rich sometimes at the expense of the overall industry.
Mm-hmm. Okay.
So I agree. We're both big proponents of it, but again, talking about regulation and some of these other litigation, I think it all focuses itself together at some point, because I think it just becomes one of the issues. Maybe it's not the primary issue, but I think it's an issue.
Yeah, no, because it's a case out of California PLS. Like, we don't talk about it enough, but I think they win and they eliminate clear cooperation policy. But then again, who knows? With lawsuits are
it's too bad, because I think that was beneficial to everybody. But I can also understand the argument on the other side.
All right, and then final question for you, gentlemen, and I'm gonna let you go, because my producer EJ, who's a young 20-something Gen Z, and I were talking. I'm Gen X. I think we're all kind of Gen X. What was the best musical decade and why?
The best what?
Musical decade. The best decade for music.
I think the 80s.
80s, and why?
Oh, I thought you meant musical, like Broadway musical.
No. Music. You think about all the great. Again, maybe it's because we're old, but you think about the Rolling Stones and U2 and like all the classic bands. But my kids are going to say something much different than that.
I would say.
What do you think, Thad? 90s. Okay, why?
90s rap. Biggie, Tupac, East West, all the rappers that came from that. That's what you work out to. That's what you dance to.
Wasn't some of that 80s though? Wasn't some of that late 80s?
Late 80s, like 1987.
Run DMC.
Run DMC, whatever. But the real East Coast, West Coast, NWA, Dr. Dre.
It was 90.
Snoop, Biggie, all those guys came out kind of like in the early 90s. And so, I would say, and look at what are our kids listening to today? That genre has only rocketed since then. So no one's going back. My kids aren't listening to Carly Simon.
Not Not yet, anyway. All right, so there we have. And for the record, Sunny and I have discussed this topic. By the way, Sunny would love your answer to that because Snoop is her man. Snoop is her dog. But we decided on the 90s. But I was really arguing for the 80s, right? Like Mike was, because new wave music, hip hop, the birth of like real hip hop as we know it, all this stuff. And then Sonny did point out 90s country is infinitely superior to 80s country. I was all right. I give. It's the 90s. All right, hey gentlemen.
You guys say this joke. You guys say, why does Snoop Dogg carry an umbrella?
Okay, why?
For the drizzle.
That was so bad, Thad. That's like a total dad joke. Oh my god. All right, gentlemen, thank you so much for your time, and I really appreciate it. And for anyone who's listened this far, if anybody just wants to get a hold of you guys, just to further conversations or ask you about what your thoughts or about whatever, how do people find you?
Email, phone, smoke signal, whatever. We answer anything.
What is your email address?
Mike Golden at atproperties.com. Thad Wong at atproperties.com. And our names are spelled how they sound.
Yes. All right. And just want to make sure y'all don't have Instagram or TikTok that people should be following or anything like that.
Instagram. I got Facebook. I got LinkedIn.
So it's Mike Golden on Instagram.
I'm not a big poster. I got it, but I don't really post. So you don't want to follow me because I am boring.
Are you on Instagram, Goldie? Are you on Instagram too, or just Facebook?
No, I'm on Instagram.
Are you on LinkedIn?
I'm more of a voyeur.
Are you on LinkedIn?
Yeah.
All right. Well, we'll put all the links in the notes, at least on YouTube below. So once again, thank you, gentlemen, both so very much. And thanks for listening to all of this, everybody.
All right. Appreciate it. Thanks, Rob.